Welcome to the Compassionate Capitalist podcast, and today also a video. If you're listening to this podcast, you can go to the show notes and get a link to watch the video. And if you're watching us on YouTube, then you can also listen to it as a podcast with the link that's in those show notes. So I have a very interesting guest today, and it's one of the things that, of course, we try to do with the Compassionate Capitalist podcast is bring information, knowledge to those people that are looking to invest in new industries or understanding trends and technology, as well as for the entrepreneurs out there that are trying to understand how some of these critical platform technologies will impact the future of whatever it is that they're looking to create or join a team on. And so, of course, today we're going to be talking about blockchain, because blockchain, in my opinion, in my long history of working in and out of the tech field, I believe that blockchain is as fundamental to the direction of where technology is going as many decades ago the internet was, in changing the way we connect and communicate, and then how we get our access to our applications and data with the cloud being hosted up, all of your data and your applications hosted up on a server that's not necessarily on your workstation or on your laptop or on your phone. And so the evolution and how that changed how we do everything with the cloud, well, I believe that blockchain's doing that in the way business is going to get done in and around the world in the future. And so my guest today is Eddy Travia. He is the co-founder and CEO of Coinsilium Group Limited. Eddy Travia he's a pioneer investor in blockchain technology and startups, and as the co-founder and the CEO of Coinsilium, it's a London-listed venture builder, investor, and advisor to early-stage blockchain technology companies. In July of 2013, following 9 years as a private equity fund manager in Greater China, Eddy co-founded the world's first global incubator of blockchain startups. And so think about it, that was 2013. Most people had never ever heard of the term blockchain at that time, 6 years ago. I mean, I know it's probably been about 5 years when I started trying to understand the difference between that. So for the investors that are listening and the people that have purchased my book, Inside Secret State Angel Investing, one of the things I try to teach folks in that is to be ahead of the curve, try to look at where tech is going so you can anticipate and get the best value when you're looking at something that's new and innovative. So I had to kind of throw that in on an aside. So in May of 2014, Eddy was named among the top 3 most influential investors at the Blockchain Awards. Coinsilium was the first ever blockchain company to join a stock exchange via an IPO in 2015. Eddy has led early stage investments in 20 blockchain companies. And we're going to talk about one of the companies that they've invested in that's a big area where blockchain is going is in contract management. And we'll talk about that. And then we're going to talk about how it's changing the way we prevent fraud in finance, and how it's really being adopted in a large way for these underserved communities that have a lot of unbanked or don't have a lot of access because of transportation or access or just geographically or just the nature of the economies in those communities. They don't have a lot of ways to become banked, and without being banked, you can't participate fully in everything that is about our society. So with that short introduction, I want to welcome, hello, Eddy. Thank you for being on the Compassionate Capitalist podcast show.
My pleasure. Thank you, Karen, for inviting me to speak here.
Yeah. So I always like to, clearly I just kind of gave the last 5 or 6 years of your accomplishments in this area. When did you first discover blockchain, or first get an inkling, this is something I need to be ahead of and take the charge and leading the way in that? How did you first start to get involved? I know you were in the private equity fund, but what were your first sort of indicators that this is a direction that things are going, and how did you embrace that?
Late 2012, there was already a small but growing community in this space. which was more around cryptocurrencies. But of course, blockchain is the underlying technology of any cryptocurrency. So that's when I discovered blockchain as well. And my first instinct was to go in and invest in the companies that are actually going to build the infrastructure around this new ecosystem, around these cryptocurrencies, not necessarily just buying Bitcoin or similar coins in the market, but actually to help startups grow and, for example, build exchanges, wallets, remittance services, services that would be coming from the breakthrough that cryptocurrencies represented.
Okay, so you brought up a point there that I think it's worth for folks that are kind of new to this idea of blockchain, or even as we talked before, here in the United States, there's so much of this kind of joined at the hip between blockchain and crypto, and I always say, whenever people start to have a conversation on that, I go, don't put them in the same sentence. We have to separate them. Crypto is an application that's enabled by blockchain. So, break it down real simply for folks, just so everybody's on the same playing field as we go forward in this conversation about the difference between them and how that actually, why that is.
Well, the problem that Bitcoin has managed to solve is a very old problem in the world of digital cash, because before Bitcoin, there were many attempts to create a digital currency, but the only way to do that until Bitcoin was around a database, a centralized database that would record transactions. The problem with that is, as we know, a database can be manipulated, a database entry can be changed, so there was still need to trust a central party. And when Bitcoin was created, the major change, the major breakthrough was the fact that you didn't need one central party to authorize this transaction, validate this transaction, because that book, that ledger, that database was actually decentralized and was run by different nodes all around the world. And so basically you trust the mechanism that make it work. And that mechanism is actually blockchain. It's basically the fact that all transactions are recorded in a ledger, in a digital ledger, and that ledger is shared among all the nodes that are running the Bitcoin nodes and the Bitcoin network. So basically, blockchain wouldn't exist if Bitcoin had not been created. But once Bitcoin and blockchain started to evolve, and the fact that people start to understand it and use it, many entrepreneurs and tech developers realize that you can do other things with blockchain apart from just moving Bitcoin or a cryptocurrency, because obviously a cryptocurrency is also a data. So you're basically exchanging data in a way. So therefore, a completely new industry has been born around the underlying technology, which was originally Bitcoin in 2009. And that transition actually happened a little bit later after I got involved in the space, because in 2013, blockchain was not the main focus. But as about 2014, people realized that blockchain was really something important that could actually have a long-term impact on the way we share value and the way to minimize trust between different parties, because that has always been a key element of any transaction in the world and exchange of value is, who do you trust? And therefore now we have an alternative to central authorities, central banks, etc. And that alternative is blockchain.
I think that's a great point. This centralized trust, it's like a trust matter, because everything we do in business, there's the old, we just do it on a handshake, right? Because you trust that person, their word, when they shake their hand, that their word is good, and their word, it's as strong as a contract, right? That's sort of like the good old days of doing business, right? And then as we become go outside our local neighborhood and doing business, at somebody that you can do eyeball to eyeball, that or you've known them all your life, or you've known them for a long time, then you get into, and I have people that I do business with that we don't have a contract. We just know that we're going to make sure that we take care of each other, we trust each other, we value the relationship, and it's based off of the relationships. But then, inevitably, as things grow, you get beyond that ability to have that relationship. And so contracts become that sort of arbitrator that everybody's going to do what they say they're going to do. But even then, contracts have become something in a paper society that, as we go digitized, that sometimes those contracts, get lost in the shuffle. They can be manipulated. And I think that was one of the reasons, real estate is one of those areas that is fraught with that, because they always, whenever you go to buy something, you always have to go see what's the history of the ownership, the chain. And we hear about fraud where people are taking out mortgages on homes that they don't own. There's all these different kinds of things that or that happen within the real estate where you think it's okay because you've got a paper record of who owns that deed, or a transaction that was done through a contract. But then, as we saw that happened during the collapse of the housing market, a lot of those foreclosures could never be collected because the chain of contracts was so convoluted and broken, they couldn't establish who actually had the mortgage on that. So talk a little bit about how you see blockchain affecting that or improving that particular process and some of your experience, and then the company that I know that you've invested in out of Austin.
Yeah, sure. So what is important is that when we talk about blockchain, we talk about this kind of evolving ledger that adds transactions and records every day, but actually no one can go back and erase anything, because the way it has been technically built means that you cannot, if you try to change a transaction that happened yesterday or 3 years ago or 5 years ago, you break the whole chain, and therefore the blockchain becomes useless, and there is no value in maintaining it anymore. So what you're saying is very true, is around the fact that there is, as soon as there is a chain, a supply chain, a chronological evolution of some kind, and obviously most of the business we do is based around a chain of some kind. So for example, an audit chain, an audit trail for a company, or in the case of contracts or documentation or due diligence, you have to follow the different steps that have been basically being followed by each actor, each player in that chain. So blockchain is extremely valuable in that area, in that sector. And we early on in 2015, one of the first investments we have made in the US was a company in Austin called Factom. And the first problem Factom was tackling was around, initially they had an experiment on land registry, because especially in developing countries, land registries are either corrupted or badly maintained, or maybe not even digitized. So you basically have a lot of potential failures with central authority, or just an employee maybe, or the cadaster or the register of land that can manipulate or change something, tamper with the information, or maybe a storm, or what happened in Asia, a tsunami can actually destroy files, destroy records. So that company Factom was looking at helping these countries, developing countries, to actually make sure that the whole chain of ownerships and deeds for land and homes was actually recorded on the blockchain, which is incorruptible and cannot be tampered with. And then they evolved, and because they're based in the US as well, they started creating a product called Harmony, which is actually helping very large property title companies in the US. We're talking about billions of dollars worth of real estate, where people actually are borrowing money to enter into a mortgage and to buy a house. And as you probably know, because you're in the US, this is a lot of paperwork. And this paperwork can be, technically it's called hash. So basically the information is hashed and put into a blockchain. And the blockchain, and actually even different blockchains, because Bitcoin was open source, so anyone can actually copy the tech, the blockchain tech underlying it. So there have been clones, there have been new types of blockchains, and basically you can anchor these data on different blockchains. And what you do is you want to make sure that no one tampers with the data. No one can go back and change anything. You know that at a certain date, this data has been entered, and you can compare the different hash information to make sure that it's the same. It hasn't been changed. So this is a concrete problem which has been solved and has become an actual solution that is bought by banks or property title companies in the US at the moment.
So I want to get into the personal identity stuff, but I want to, in a second, I want to ask about this. So if you've got banks and, you know, I guess more, the folks that do the mortgages, the ones that are also, I guess, county governments that track the deeds and who owns them, at least that's the way it's done here in the United States. So where's the sort of it's the chicken and the egg, right? Because how hard is it for a company to do partial blockchain verification, but then also have legacy systems of paper? Because maybe, you know, some counties are on board with it, some haven't, or, you know, where do you see, and that's, I guess this would apply to every place that is looking to adopt, or industry that's looking to integrate or adopt blockchain as a part of their fundamental operations, where it seems like I'm not sure how we get all the way there. You know, they're there, right? I mean, we can look back and kind of see how we got all the way there on, you know, various types of tech, but blockchain having been around about a decade now, where do you see, how long do you think it will take, or will we get to a point, just staying within the mortgage space and the property rights? Will we all get there in the next decade where it's totally that way? Or talk a little bit about what you think the trend or transition might be about on that.
So you're right. There are several sectors that have been looking at blockchain, and some of them are extremely complex. So for several years now, different institutions have looked at the supply chain of commodities. And when you look at the amount of paperwork and the amount of different actors that are involved in sending commodities from a country to another, and the customs and the logistics aspect is very, very complex. But actually, blockchain is very well suited for complex supply chains and complex chains. And it also a way to make things that are not interoperable actually to become interoperable in a way. Because you're right in the sense that you need that kind of very straightforward full blockchain solution, basically meaning that all the data should be recorded. If you don't, then you have a problem, you have an issue, because you cannot compare, you know, the technical aspect of hashing any data means that you cannot change anything. Now, what is important also to understand is that blockchain does not guarantee, obviously, the quality of the information. Blockchain guarantees that this information has been there at that date. It's a timestamp at a certain time, and it has not been changed until the time you want to compare it or you want to look at it, depending on the way you enter it and you store it. So it's basically more of a security and data management security aspect for the moment. And I would say that at the moment, I don't know of, you know, there are many large companies looking at blockchain and experimenting with it, but they usually take a very specific first step and maybe a niche sector, a niche industry in which they're working, a specific problem to solve. So for example, recently Volvo announced they're using blockchain to track the cobalt that they use in their car batteries. They want to prove to the world that the cobalt that they use doesn't come from mine with child labor. Some retail stores, supermarkets will use blockchain to prove to the world that the food is organic, not coming from, I don't know, certain place. So again, coming back to this trust element, if people understand how blockchain works and understand that the data and the the data chain cannot be corrupted, then the big brands, the big companies out there, what they want to achieve is they want people to trust them because they're using blockchain. So yes, the industry, when it's adopting blockchain, it tries to have this kind of hybrid solution where they still can use their legacy systems, but they can add the kind of blockchain layer, which at the same time adds a trust element for, for everyone else to make sure that the data has not been tampered with. So we're still in that kind of gray zone between legacy and blockchain. But my feeling is slowly blockchain will come in, replace certain legacy systems, not all of them, because database storage is actually especially for large amounts of data, requires a certain type of processing power, etc., a certain speed as well. And blockchain is not extremely fast or flexible, especially the public ones. There are some what we call private blockchains, which are, let's say, less strict with the way, less rigid with the way it works, where actually you can gain a lot in speed, for example, in flexibility, but you lose on this decentralized and you lose on the trust minimization. So there is always this kind of trade-off that is happening for the moment. But for the moment, it's a coexistence, and these large companies start to use blockchain a bit like maybe the internet has done in the past, where large companies start to use email, and then they realize, well, maybe we could use internet for digital signature, etc. So let's move on, and e-commerce. So we're still in the first years of blockchain implementation in very large corporations.
Well, and that the examples that you gave, they can their value proposition and why they're using it, they can control it, because in that example of the mine, or in agriculture, they own sort of the relationship with where the source is. And so they implement the policies and practices that when you take this lettuce out of the ground, or you take this cobalt out of the ground, then you're going to recode it. And this is time stamping that's when this came from. And that's, and then that piece of information follows that product or that substance, through the rest of where it ever goes, and, however it is used. So I could see they don't have to be integrated with all the other auto part manufacturers or any of this kind of stuff. Eventually they'll get there, because some of them, right, they can get there.
Yeah. Suppliers can be part of it.
Right.
Yeah.
I mean, I think supply chain management is going to be one of the, probably an industry application like contract management and then what we're going to talk about next, that really drives the entire adoption of it over. And so the piece of it that, people, this identity theft, fraud, now Clear has this whole campaign where they're showing how you could use, your retina identification as a way to validate your financial transactions, your travel documents, all these kinds of things within their own sort of, back to, I think it's still a central database. But there's been a problem that they've been trying to solve. I had a company that I worked with off and on for many years that is, they had tried to verify this tokenization of financial things of value from one end to the other before it was really called Bitcoin or anything like that, or crypto. I mean, they've been kind of solving this for a while, and now they've come up with bit minutes is what they do. And so you can use by cell phone minutes and monetize that as a way to transfer versus, transferring funds from one country to another country. It's a way, but it uses it within the crypto, blockchain security piece of that, for a long time trying to solve the problem in some of these countries where they don't have access to banks, or these communities, they don't have access to banks. But I can see where, you and I had this conversation before about how it's changing fundamentally how engaging of communities that may have been disenfranchised from being able to, really do anything, to be able to get a microloan, to do anything that would take them out of their current situation to a more positive fruitful situation. So explain how you see blockchain being implemented and kind of who's driving it. Is it World Bank? Is it GNOs? Who's driving the adoption of this in these local communities where in some cases the government may not want to have full engagement of their community? And so is that become an impediment, or are they be able to work around that now because there's enough other organizations that want to see full engagement of these communities?
Yeah, so one of the basic issues with certain developing countries with the unbanked, first of all, is do these people have an identity papers? Sometimes they have trouble having a birth certificate or a proof of identity, which of course prevents them from having usually a proof of ownership of land, ownership of houses, and then basically remove them from having access to any financial network, any financial system where they can use different services. So in many ways, cryptocurrencies are actually extremely suitable for this kind of issues because, as we discussed, in a developed world, in Europe, in Asia, in the US, certain parts of Asia, of course, you can use so many forms of payment, transact with so many people using existing forms of payment that you may think that cryptocurrency is just another way, and it doesn't necessarily bring anything incredible for someone who's used to pay how they think they pay digitally every day, even if crypto is, let's say, more free in the sense that you don't need to go through banks, for example. But if you go to developing countries, so we're talking about certain parts of Asia or Latin America, where we have invested in a company called RSK, you have, or Africa, of course, that we're looking at as well. A big part of the population, the first problem you solve is digital identity. This is also, of course, for refugees, it's the same issue. So you solve digital identity for the first, in the first instance. Once these people have an identity, cryptocurrency makes it much easier to access financial services, microloans, the fact that they can interact again, when we're talking about the trust circle being first closed, in your community, but from your community, you can start interacting with people lending you money from all over the world, really, selling your produce, selling your service to the world because you can accept payments. And there are many countries today where they cannot do this. Some countries for economic reasons, some for political reasons, etc. So usually it's kind of a partnership model. So for example, RSK works with the Interdevelopment Bank. There are different organizations, NGOs. For example, there is an experiment right now between the UN High Commission for Refugees and a payment mechanism actually through the Retina as well, that's taking place in the Middle East. So you have, but it involves cryptocurrency and blockchain. So you have different experiments around the world helping promote this solution so that people can have access to loans, can have access to e-commerce, and can have access to basic financial services.
That's really that's interesting. That's encouraging to hear that the UN is recognizing and using the power that they have, because at some point, it has to be a top down that says we want to try to engage and use tech to be able to, improve the economies, because when you have a disenfranchised, unbanked, large population, and particularly as you say on the refugee side of things, it just becomes systemic in their ability as their next generation, everything that just sort of kind of get locked in this limbo land. And so on the there's a trust factor associated with some of this, because do you think, I still have friends right now, the younger generation is like, oh, Cash App, Venmo, oh, split the cab thing, oh, I have no problem paying, putting my money into an Uber or to all kinds of stuff, right? They could completely trust the system of using cell connection to these payment systems. And but then there's a whole other world of, and that will never, they barely do PayPal, right? And so PayPal's been around a long time. I was at the gas, I was at the filling up gas the other day, and it had up there that you could use PayPal or Venmo. No, it wasn't Venmo. It was PayPal or, well, one of the other ones. And you could pay, if you bought certain snacks, you got double points or something like that using these alternative things rather than a regular Visa or, your regular debit card or something like that. And so I think, and so is United States unique in this, in that we are less trusting of these digitized methods of payment? And if so, whatever that particular thing is, will gaining trust that blockchain is a better, more secure solution? It's just a matter of time of people beginning to trust it more than they do. Like I personally don't trust some of those cash apps. I use certain ones over other ones because of experiences I've had or my daughter's had with those, and I won't do certain ones. But would blockchain become something that I may not be crypto, I may not do transactions in that, but because I choose a method of payment that's within the blockchain that is traditional currency, I would have a more secure transaction, and that's the wave of the future. And kind of back to that, chicken and egg thing. Where do you see it going in the Europe and Asia influencing the United States to eventually get on board with that, or is everybody kind of waiting for the United States to get on board with that?
No, I think there is definitely influence from Asia at the moment. I mean, in terms of digital payment apps, I think the most successful ones are in China at the moment. WePay, Alipay, Tenpay, etc., are extremely used. But what is important is that these apps are actually they are connected to the bank. They are not parallel to the bank. They're not another alternative. They basically, you have a much better user experience because you pay by scanning a QR code and you can pay anything anywhere. But actually, your bank account is debited. Your credit or your debit card is debited. So it's basically all going through your bank account. But you're very right in the sense that millennials, especially millennials, they don't need a bank. They don't want to line up at the bank. They don't even trust banks the way we trust banks. So there has been this shift in both trust and usage. And in terms of digital currency and cryptocurrency, what we have seen is we have recently seen that Facebook tried to create a group of different members, or let's say, of the financial services, mainly in the US, including PayPal, etc. And they want to call that group Libra, and that kind of network. And with that network, which is actually based legally in Switzerland, but with that kind of network, they want to facilitate cryptocurrency payments with their own currency called Libra, cryptocurrency called Libra, which is actually pegged to what we call fiat currency. So fiat is basically what the cryptocurrency community calls any kind of non-cryptocurrency. So fiat in the sense that it has been created by a government or by a central bank. And we saw the reaction. So we have a very antagonistic reaction in the US. But still Libra is going on by all accounts anyway, by what I know. But we have seen how they grilled Mark Zuckerberg, etc., and how there was a big block of the political space in the US against it. And then in China, we have the Chinese president, Xi Jinping, who says, we want to go into blockchain. And a lot of analysts and reporters believe that also means that Central Bank of China wants to go also in that direction of issuing its own cryptocurrency. So I think we're going to go in an era where a lot of central banks are going to create their own cryptocurrencies, for different reasons. Again, one of the reasons is because of this kind of traceability and chain and like natural audit trail it creates naturally. And of course, one of the other reasons is because they have control over it, and no one has control over Bitcoin in a direct manner. So yes, so we have kind of the convergence between a new generation who doesn't really care about banks and doesn't really care about centralized authority, as long as they can pay and as long as merchants accept the money they're sending. And a new generation, which is, of course, as we know, extremely connected through social networks and through, and basically with friends all over the world that they can contact and they want to buy from anywhere, etc. So naturally, when I discovered Bitcoin back in 2012 and started to be more involved in 2013, I felt, for me, it felt like a natural evolution of money. The fact that we're going towards what we could call an internet native currency. The fact that this currency has been born in the world of cryptography, of course, but also by people who understand internet. Because credit cards are very old. Credit cards come from a multi-decade pre-internet world. And when we started using credit card on the internet, although most of us had the same suspicions and were not that easy to do, we still understood that we have all these steps, because credit cards have never been produced to be used on the internet. They have been produced to go in a shop and pay with it. Mm-hmm. So a whole layer of technology has been built around it, so that when we book a hotel or a flight, we feel like we're paying on the internet, but we're not. We're basically instructing some bots or some programs to go and get the money from Visa or MasterCard. So for me, cryptocurrencies are really a natural evolution of money, and up to the point where actually it would be government sanctioned. I mean, some of them, not necessarily Bitcoin, but the government will sanction their own cryptocurrencies and will produce their own cryptocurrencies.
So within that, if each of these countries, and they're predicting their own crypto, for those that are kind of new to this idea, so will they have an exchange rate the same way that you have euro exchanging to dollar, or is there because it's all on a certain platform, whether that's Bitcoin or one or the other, they all have a common exchange rate and it's just another coin within the umbrella of Bitcoin? Or, explain that for those that may not be familiar with all of that.
Yes, I mean, you're right. At the moment, there is what we call the Forex market, which is actually, I think, a 5 trillion market a day. I mean, Forex are extremely traded. So foreign currencies are extremely traded on different platforms. And these are not what we call cryptocurrency exchanges and cryptocurrency markets, where you have markets with actually a lot of volume as well, not trillions, but billions of volume and daily. And these markets today are deciding the price of Bitcoin, just, supply and demand and offers, etc. And so there are a lot of large exchanges around the world, although many of them are originated in Asia, but there are a lot of exchanges around the world. For example, Kraken or Coinbase in the US, and people can go and find the price of Bitcoin and other cryptocurrencies like Ethereum, etc., and they can trade. A lot of these exchanges are using, in a way, very similar, and they have to because of regulations, but they're using very similar ways to do business as even banks. I mean, as very traditional financial services. And the main reason being is because they are under the same regulations, are regular or regulated financial service providers. So we don't know exactly how a digital cryptocurrency or a cryptocurrency will interact in this space. It's a question for the moment. Will it go directly on the new exchanges, crypto exchanges, or will they also work in both Forex and crypto? I mean, naturally it comes at first if it's pegged to a national currency like the renminbi or the US dollar or the euro. Obviously, it will depend also on the price of the Forex markets, because you cannot have two prices. But this is still, this is still early. And what I think is, at the moment, central banks are experimenting. They're trying mainly on the technology side, and then the market will take over. I mean, this is what happened with cryptocurrencies. Cryptocurrencies were technically originally very different from fiat government money, but in the end they create their own whole ecosystem of lending, staking, futures market, derivatives market. I mean, there's a lot of traditional financial services today involved in the cryptocurrency space.
Yeah, it's almost like you can't not be involved in it, because, like you say, it is a natural evolution of money. And so when you look at, if we, from the beginning of here, where I talked about blockchain as being this platform that will change the way all the different things that we've talked about so far, contracts, land rights and verification, identity verification, all these different things that are, and origins of source products, all those things that fundamentally are enabled, and improved as a result of blockchain. In theory, money, this is another element of that, as the direction it goes. So with kind of that fundamental, this is, skating to the puck as we sort of wrap up here, Eddy. Talk just sort of, where do you, for the investors and entrepreneurs that are listening, what do you want to say? This is the kind of thing you should look out for. If somebody solves this problem or is solving this problem, or here's this area that just, is there any direction and prediction or what, that you'd like to make?
Yeah, sure. So the current trend of cryptocurrencies, and it's a kind of a convergence between services, financial services, and financial needs for people, and where cryptocurrency is at today is usually under the term DeFi, which means decentralized finance. Decentralized finance, financial services that are basically using crypto. And I think the major shift and the major trend that I'm looking at, and that we in the industry we're all looking for, is a very large adoption. Because what happened is, we had the chronology of blockchain adoption has been to start with a small community of very passionate people, very interested in the technology and in the value of the cryptocurrencies for some of them. But then there was this big shift towards more speculation and speculative kind of activities, and what we could call transactional type of businesses. And that has taken most of the focus, and a lot of the money that has been invested in this space has gone towards this kind of activities, basically around the price of tokens and cryptos and speculation and exchanges and futures, etc. Now, the next stage, what we hope for, is that more money will go into building the technology and making sure that people actually use the services, adopt. So it's basically the holy grail of adoption. So the whole community and the whole industry wants people to actually start using it in the same way that the internet, that you had Amazon in 2005, which represented a clear minority and a drop in the ocean of, Barnes and Noble and etc. And then Amazon, 20 years later becomes, the main e-commerce, the main commerce retail platform in the US, for example, and part of the world. So that's what the crypto community is looking for. We're looking for services and solutions that can be mass adopted, that millions and eventually billions of people will use. That's why actually the Libra announcement has been taken positively by the markets at the time, is because everybody knows that Facebook is a multi-billion dollar company, of course, but also multi-billion user social network. So when you start marrying cryptocurrency and billions of users, then you can get to that stage. That's a lot of the preparatory work towards DeFi and crypto adoption that gets taken care of. And I think more in the news, and next year in 2020 we'll see more and more projects that are going to look at very massive scale deployment of cryptocurrencies and cryptocurrency related services such as DeFi.
Very good, very good. So we're just about out of time. I want to encourage folks to go and learn more about you. It's Coinsilium.com, right? It's Coinsilium. Is it .com or .co?
.com. Yeah. Coinsilium.com. That's correct.
Yeah, and that's all about your investment, and tell people what they might find if they go there. If somebody wanted to kind of follow on and co-invest with you or get involved, do you have a way for people that are maybe not as knowledgeable about this, but they want to be a part of the next wave of what happens with blockchain to join?
Sure. So our shares are traded on a stock exchange, recognized stock exchange in London called Next Exchange. Our ticker symbol is Coin, COIN. And yes. And well, we are an investor, so you have exposure to our portfolio of investments. And we also have revenue generating activities such as advisory services, and we also have some venture building activity. So we are a bit more active than the regular investor, and we always come in very early. So for some of these companies, we came in at, let's say, below $10 million valuation, and some of them are, in the $100 million valuation or more. So we keep on trying to find the best ones out there.
Well, thank you for that, because I mean, it's a complicated area. There's, as with any new type of tech, there's always, which one is the one, there's always, competition within the startups or within the early stage within that, trying to navigate to figure out what is the best approach. And having somebody that's as experienced and insightful as you and your team to help, navigate that, as whether it's, just kind of you picking the winner, so to speak. I appreciate the fact that I have met you and that I know you as an expert in that I can turn to when there's, something that comes up that I need to get a clearer picture on, that's a whole lot more experienced and smarter about this than I am. So thank you for being on the show, Eddy. I really appreciate you taking the time. I know it's, you're in a completely different time zone at a conference talking about all about crypto and blockchain. So you're leading the way within the industry, and thank you very much for being a part of the Compassionate Capitalist podcast.
My pleasure. Thank you very much.
You're very welcome. And I always in my show, please go visit KarenRands.co to learn about what we offer to entrepreneurs and investors, and also to get information about my book. You can pick up 12 of the 47 secrets as a document that's available there, that you can go and get a teaser on what the secrets are for getting started in investing in these private companies and these new opportunities. And with that, I want to say thank you again, Eddy. Onwards and upwards.